Hello everyone, Michael here from Storehouse Analytics. Welcome to the Storehouse. Today is the 1st of June 2016 and I'm recording a new video with some market analysis on some trades that I've taken this week for educational purposes, obviously. To start with, again, I wanted to say a big thank you to everyone. We hit our goal and we've surpassed it. And today is the 1st of June. We have, I think, as of last count, 113 subscribers to the YouTube channel. Thank you all to all of you for helping us achieve that milestone, a personal goal for us. We've now set a new goal, as we're always looking to improve, and the goal will be to hit 200 subscribers by the end of July. So a couple of months from now, we want to hit the 200 mark. I've set it at that pace so as not to put too much pressure on anyone, but thank you for sharing the videos and for liking them and for the multitude of questions that they've generated. Thank you for your grace for supporting the channel. We really appreciate it. The feedback is important so that we can make new videos for you and give you more information on the methodology. So a big thank you to all of you. To celebrate the milestone, as I said in the last video, I am planning a webinar which should happen in the next month. So I would like to ask that you start sending me questions that you would like addressed in the webinar. It'll be a market analysis webinar. We'll have a Q&A section as well, which I think is really important just based on the volume of questions that I have gotten over the last couple of months on the methodology. So send your questions to storehouseanalytics@gmail.com and we will take it from there. Okay, so let's get into the charts. That's why we're here. So as always, we start with the risk disclaimer. You see it in front of you. Remember that trading any instrument, whether Forex or futures or options, is risky. Don't trade with money you can't afford to lose. Do your due diligence. Pause the video, read the disclaimer, and understand that you have 100% of your profits, you have 100% of your losses. Your decisions are yours. Okay, let's get into the charts. That's the juicy bit. Okay, so I'm going to run through with you a few trades that we've taken this week. I have a bit more time on my hands this week, so I've been looking at the markets with the eyes of a day trader in the last few days, and I wanted to present that because people know that I primarily trade as a position and swing trader, but wonder whether this methodology would apply to a day trader. And I always say to them, absolutely, 110%, because the methodology cuts across time frames. All you're doing is looking at the fractality of price. It doesn't matter whether you're a day trader, a swing trader, a position trader. What's most important is finding the time sequence that suits the type of trading that you're doing. If you're a day trader, you have no business looking at the monthly chart or the weekly chart. If you're a swing trader, you have no business looking at the 5-minute or the 10-minute. You're looking at bigger time frames. So it's important to get that balance right. The time sequence decision comes before a trader even looks at any chart. So for my day trading, these are the charts that I look at. I have 3 big time frames on top. The daily chart is the biggest time frame. I have the 360, which I use to monitor my trends, and I have the 90-minute, which I look for zones on, and then I hone in on the zones on the 60, and this chart changes anywhere from 15 down to 5, which I also use to hone in on entries. Okay, so let's run through the US dollar Japanese yen. Oh, by the way, I'm sure I'll get questions about this. This is my I call it the dark chart because it's what I use to help me set my stop losses. So let's start with the top down analysis for the US dollar Japanese yen. I posted this on the Trading Institutional Order Flow thread on forexfactory.com before any trades kicked off. These were posted in the morning yesterday, and you can see it. I'll show them to you on the Forex Factory website at the end. So going into yesterday, this was how the chart was when we were analyzing it. So yesterday's candle hadn't formed, and we were looking at this area as current supply that price was hitting. So what I said was price was into daily supply. The nearest area to even consider that would be a challenge for anyone who shorted up in here was down here around 110, around this price level. Now, I said I would start looking for shorts up in this area because that's what the decision matrix dictated. So I needed to definitely not be buying in this area. I had the right and the privilege to start looking for shorts, which may happen, which may not, but at least I could start looking for them. So knowing this, I went to my entry time frames, which are down here, and I started looking. So I found this was price arriving into that daily zone, and you can see how extended it was. You had barely any pullbacks, just continuing to go up, bang into the daily area. And so this was why I said we started to look for short. So the first one kicked off. I missed this one, I think, because it was 4 a.m. my time. I was either praying or still sleeping at the time, I don't know. So here we go. It hit it because you had a trend line break inside a daily supply zone. A trend line, and the break of an uptrend line results in the creation of a supply zone. Not only that, but it also took out at least that demand zone. It reacted off of this one, caused the rally back into supply. Boom. Anyone watching this probably in Asia or in the US, if you had seen that, you would have taken that short. So I got up around here and I saw that this little circle here, this demand zone, demand, why? Because all these took out at least that demand zone. So these were supply zones up in here, big drop away, ugly zones, level on top of level type of scenario, but they were all taken out by this little guy here. So when this little guy was taken out by this guy, this became supply. So I shorted on this 60-minute first one here, and then I'll show you the other entry, which was the more valid entry. This was the more aggressive entry. Shorted it because this area was taken out. So even though it wasn't a full 2-to-1 drop away, it was an aggressive entry, to be fair. And as you can see, price went in further and then I shorted even more in here. I exited my trade somewhere down in here, and you see what price is doing currently. So this was the trade on the US dollar Japanese yen. Let me show you where I actually entered. So this was a chart I also posted. That was that 9-minute zone. I made it a 9 minutes. It's not a special time frame. There's no such thing. I only drilled down to different time frames, going actually from 15 to 10 to 9 to 8, trying to clean up the zone to help me see where actually are the piles of orders. So that's how I found it. Just looked cleaner on the 9-minute. That's all. It's not some special time frame or anything. So found that. Look at the drop away from that. It took out so many zones in here. eventually reacted to this one, price comes back, and good night, Irene. There you go, all done. This 9-minute was in the daily supply. So to summarize, price at daily supply, not allowed to buy, allowed to start looking for shorts. No need to bother with trend because you're at curve level. You're at the level of the supply zone. You come down to the entry time frame. You start looking for shorting opportunities. You start seeing price levels like this and that one on the 60-minute that I just showed. It's a short every time. Okay. All right. So moving on. I've still got voice problems, people. Pray for me. So moving on to the next trade, which was a bigger time frame trade that I took. I think I also posted this. That was a short on the Euro USD. I never believed I would be shorting this pair because I've just stayed away from this graveyard for a while now because it's just been doing very little. But what we did have, which I haven't marked on here and I will now, is we had a break in a trend line. I believe this is the peak, and this was, I'm going to ignore the drop-based drops for now because I just want to show you how we got this trend line. It's a bit of an aggressive trend line, but I'll tell you that the reason is because it is the valid trend line in the sense that if we'll go through it now. So that was the trend line which makes this area supply. But look at where is demand. Look at, you had a drop, base, drop, base, drop, base, drop. Three continuation patterns in a row, which tells you the price is quite overextended. You're allowed to draw an aggressive trend line, which is an aggressive, really difficult trend line to draw because it's almost like you're hardly touching price down here because it was almost vertical. Okay, so supply zone removed, demand is created somewhere down here, which is why we now have price reacting to it, and it's still not broken below these lows. So we have this supply now taken out by something down in here, which is not readily visible to us, but we know that something in here has caused this supply area to be removed. Now this is supply because it took out that demand zone. Okay, it hasn't taken out this one yet, but it took out this level on top of it, so that's why this is supply. Now this supply has been taken out by something down in here. This one also resulted in the break. This demand resulted in the break of this downtrend line. That's why there's demand down here. Now with that really aggressive uptrend now forming, you also then have demand down in here. This is going to be controversial. Demand down in here somewhere, but that's all right. And supply up in here. So which is why you don't really have much movement in the euro. It's caught in this box, if you like. So when you're sideways like this, the decision matrix allows you to buy low, sell high. At the moment, we're high. So going down again to the entry time frames, this zone, you can see here, just to reference it, is inside this supply zone. And look at how price had been coming down. Price dropped from the zone, got a 2-to-1 distance away, and I shorted the pullback straight, and I exited down in here somewhere because of this demand. And that's it. I actually tried to get in another position yesterday, but I got stopped out of that. I was a bit aggressive in that. Well, actually not really that aggressive, but it just didn't work out. I had so many positions open. Yesterday was quite a successful day, probably the most successful day for a very, very long time. It was pretty big. So that was that. So that trade, you found it again because you would analyze your biggest time frame, which for me is the monthly chart. Prices in supply, you come down to your smaller time frame, you're looking for selling opportunities. I found this base drop, pull back into it. Again, it's a short every time. It's once you get the hang of it, it is possible. You can actually do this. It's not that hard. It's simple, but it's not easy. I guess I make it a little bit easy because you see me doing it and analyzing it. When you're doing it yourselves, it might be to start with anyway a bit tricky, a bit difficult because there are so many moving parts, but hang in there. It is possible, trust me. Okay, the last trade I'm going to show is the euro pound, which you can see there. So let's do the analysis. So I posted this yesterday, again on the Forex Factory thread before this candle happened. So this was price when we analyzed it and posted the chart. So I said price is at daily demand, just analyzing the chart as it presented itself. Look at the rally away from that zone. First time back into it, it's too low to start selling now. If someone's selling now, they're selling after price has already dropped a lot over the last couple of months, and they're also not really focusing on what information the charts are giving them at all. So I said I am allowed to look for longs because we were down in daily supply. I'm not saying this chart is going to go to the moon now. I'm just saying that as a day trader, which was the mindset with which I was analyzing this chart, this was not a place to be buying, to be selling. It was a place to be exiting any shorts that people had from, say, this zone above. Say you were short from here, this level on top of level scenario, which took out demand zones. Say you were short from here. This was your rightful exit. So I was saying I'm going to be looking down in here for buying opportunities. I don't care about the trend. The trend is not my friend in this scenario, because if I'm going by the trend, it's going down, so I should be selling. Well, I'm selling into an area where the price objectively tells me that when the last time price was here, it rallied. So I shouldn't be selling here. If anything, if I don't know what to do, I should just sit and wait, because this is not an area to be selling at. It's an area to be exiting for your profits if you were already short from higher up, or start looking for buying opportunities, which is what I did. So I went down to my entry time frames. So you'll see this is a 15-minute chart, and I saw the opportunity. Base rally took out all these supply zones. Price went up, first pull back into it. I closed my eyes, caught the falling knives. As some of my friends say, don't catch a falling knife. I love falling knives. That's how I make money. That's the only way I can buy low. You can't buy low if price is high up. So I bought those falling knives and I exited on that little candle up there. So that's that. Just simple day trades, nothing fancy. It's not to brag, it's to show you that this is possible. With the right education, with the right learning, you can do this as well. And not every day is going to be like this. Let's be clear about that. You will have losing trades. You will. It comes with the territory. But when you win, your winners will... So my winners yesterday far exceeded my losing trades. Far exceeded them. So there you go. Now, let me just show you before we finish the trading institutional order flow thread. So this is forexfactory.com. This is a thread that I run with my traders, my friends. It's a community. It's something that I value very much, and we talk. People come on there and ask questions. I actually have a lot more invisible people who are reading and learning the methodology rather than actually contributing. So this is where you want to look from. So if you see the search button up here, you can type in trading institutional order flow, or you can type my name, that's me, AKT. So you can type that in there and it'll bring up the thread and that kind of thing. But just type in trading institutional order flow, you'll find it there. So these were the trades that we posted yesterday. This was one that I didn't talk about in the video, but it was a short on the US dollar, Canadian dollar yesterday also. But we don't have time to do the top-down analysis. I don't want the video to be too long. But this was the one I just talked to you about the US dollar, Japanese yen. You see what price was doing when I posted it on there. And that was 10:24 a.m. I believe my time. And the next one was the Euro British Pound. Again, posted that on there for everyone to see. And these were done well in advance, obviously, and that's the trade as it happened that I posted on there. So it just goes on. People post their charts, you ask questions, we talk, we have a laugh. It's building a community of traders who trade supply and demand. I'm not a guru. I don't claim to know it all or the only one who can answer questions on there. It's just a fun place to be for me. When I have the time, we go on there. I post in my charts. During the Champions League final recently, I went long Cristiano Ronaldo, banked that profit. And I'm not even a Real Madrid fan. I'm a Manchester United fan. Okay, but enough of that. Thank you all very much for watching the videos. Please continue to share them, continue to support the channel. We really appreciate your support. Remember, send your questions to storehouseanalytics@gmail.com for the upcoming webinar. Let's start the process of putting it together. I hope by sometime this month it will all be ready to go, and I'll update you all on Twitter and on the subsequent videos as well. Okay, thank you all again for watching the videos. Take care of yourselves. Remember, they're protective stop losses. Use them. Bye for now.